Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar took a short trip to the upside, but soon thought twice about it, with the bulls finding the bearish resistance at 69.55 after posting a peak of 69.33. From the stab and rejection, the market is still poised for a down test, and from a daily aspect breaking down, looks towards 68.75 and where the bearish trigger is at 68.45. Now, what I mean by that is if the market does break the level of 68.45, then the trigger would be pulled to the bearish case further and look towards 67.70. As I mentioned before, any advances should fail at 69.55. The US dollar found momentum overnight after an unexpected rise in weekly job claims. It missed its 217,000 forecast and fell by 13,000 to 204, with the previous month's release at 214. Meanwhile, US retail sales climbed by 0.3% in December, matching expectations. It is assessed that further attempts to the upside should fail, and where the supply is still around 111.80 to 112.10 after the rejection of 111.72, should expect the course correction back down towards the support 111.15 and then a break of 110.80 reopens the downside to 109.80 to around 90 area. Well, the dollar yen's broken above 110, but no significant moves have been made as so far, with the safe haven demand slightly on the back foot is that we've seen so far a high today of 28. I do anticipate the market to fail unless we get a break of 110.60. As long as that's intact, then the call is back towards 109.60 to 108.60. The pound hasn't really got anywhere in the last few days and still remains above the 129.1030 level. It is assessed that further risk to the downside should emerge as we get closer to the Brexit divorce. But at present, though, I'd still remain neutral due to the fact that the indicators aren't giving much to the technical call. So I'd feel that it's safer at this stage to play a neutral bias. Since the rejection of 1,600, the market is now slowly digesting the US and China Phase 1 trade deal. What was surprising, though, was that the market also learned overnight that the US Senate approved a new trade deal between the US, Mexico, and Canada on Thursday, which is a key victory for President Trump as the Senate officially opened an historic impeachment trial against him. No doubt he has his hands full while that continues on, but looking at the technical outlook, it is assessed that the gold will probably test lower because of the indicators are still remaining weak. Until we get a break of 38, then we could see another rebound. But be on your guard because under 38 sees little support until 22 to 26. Wrapping up with oil, well, as you can see, the market is rebounded off that level of 57 and progressed further to the upside. Presently, I'm holding the view up towards 58.65, which isn't too far away, about 10 points. And a break above there will give further indication up towards $59 to $60 a barrel. So that wraps it for the day and for the week. Thank you very much for joining me. I hope you enjoy the rest of the day and a great start to the weekend.